Thanks so much for joining us. This is the University of California Merced Station EB-5 presentation. My name is Bobby Laughlin. I'm the Chief Executive of EB-5 Equity Development Partners, and we are pleased to present this presentation to you today. So just a quick company overview of EB-5 Equity Development Partners. Our company currently has over $100 million in EB-5 projects under management. We are focused now on allocating capital to very high quality student housing developments run by major developers at major universities. And we also are very focused on the allocation of capital to affordable housing as well. Our regional center partners have to have a 100% I-526 and I-829 success rate. It's a very important characteristic of our regional center partners. And one of the differentiating characteristics of our investment offerings is that they do offer the highest returns in the industry per our analysis. And our projects are offering in excess of 10% return on investment per year. And we believe that we are doing that while substantially reducing risk. And that ties into the asset class that we're selecting, the project location, the developers that we select who are running the projects, the companies that are operating the assets, and general contractors, the way the developments are financed, and a number of other factors as well. So our company does offer retrogression and redeployment solutions. I think that we are very unique in that we actually allow investors that are subject to retrogression to extend their ownership in the original project that they invest in, such that it does not require them to have to redeploy their capital in the event that the retrogression timeline is longer than the term of the fund. There is an extension option available to people, investors who are subject to retrogression, and this takes away the guessing game of where capital will be deployed in a redeployment scenario. So we don't think that anybody else is doing this currently, which gives us a lot of hope that this may actually become a common solution within the EB-5 markets, because the idea of redeployment is definitely a very intimidating one. And then the last thing is, our company does have executives with institutional asset management experience and entrepreneurial experience as well. I spent my formative years at Morgan Stanley. I was an asset manager there. We have other executives on the team that sit on the board of publicly traded companies here in the United States, and we're very pleased to be able to transition our skill sets to serve EB-5 investors. So I just wanted to touch on California for a bit. It's a $3 trillion economy here, making it the largest state economy in the United States. And if it were an independent country, it would be the 5th largest economy in the world. So we have a population here of over 39 million people, over 250 colleges and universities, 3 of which are in the top 10 in the world. And we have major company headquarters here. These are companies like Google, Facebook, Apple, a lot of entertainment companies in Los Angeles, being that Hollywood is really the fixture of entertainment, and then of course the tech companies up in Silicon Valley. And it's a very diverse economic base here, massive real estate industry. So it really is just a great place to place capital, because that over time there will be more and more people coming, and of course there will be more and more of a student population here as well. So this is just a reference point so you can see where the site is itself. This is the University of California, Merced. It is located within the city of Merced. The city of Merced is located approximately 100 miles east of the San Francisco Bay Area and approximately 250 miles north of Los Angeles. So the drive from the San Francisco Bay Area would be about 2 hours, and the drive from Los Angeles is about 4 hours. The other great thing about this location is it's located just west of Yosemite National Park, which is among the most famous tourist destinations here in California.
There is a shortage of properties right now for the demand of buyers.
Merced County is the fastest growing county in the state, but real estate agents say there aren't enough homes for the growing population. The California Department of Finance recently released their reports, Merced County joining other larger counties like Los Angeles and Fresno counties on the list.
Action News North Valley reporter Natalie Granda tells us how more people are putting pressure on realtors.
More people are calling Merced County home. With a little more than 4,000 people moving into the county last year, the California Department of Finance reports that it's the fastest growing county in the state. But the problem is the housing market is having trouble keeping up.
Vacancy factor is 1%. It's extremely low.
Take it from Andy Krodick. He's a sales manager at Coldwell Banker Ganella Realty. He says they only have about a dozen rentals available. If a house is at a good price, it's off the market fast.
In the rental market and in the housing market because of the demand. Again, a normal market, real estate market, has about a 6-month supply of homes. We have 1.6. And so prices are going up. They've gone up 20% in the last 2 years.
The State Department shows the county saw a 1.8 population increase since the start of 2017. Krodick says a big part of it has to do with the growth of UC Merced. About 1,000 apartment units are being built in the city of Merced. Meanwhile, county officials say they're working to accommodate the influx of both people and businesses.
We have a lot of projects going on right now, one example being the Atwater Merced Expressway.
Another factor is affordability. Los Banos saw the most people moving in with more than 900 new residents. Real estate agents say most of them are from the Bay Area.
It's pushed them out of the market over there. They can't afford unless they want to stay living in a little apartment. They make so much money.
Diane Tellez says they don't have any rentals available and more people are selling their homes.
A lot of tenants now are finding themselves, they're being misplaced because landlords have decided they're going to go ahead and put their homes on the market in order to cash out.
Krodick says a strong market is a good problem to have, but low vacancy will stay a problem until more homes are built to meet the needs of a growing county.
So the University of California is one of the most prestigious university systems in the world. So it really is just a shining example of what a state-run university system can be. All of the universities here in the UC system are ranked within the top 100 American universities. You know, obviously you have the marquee names like Berkeley, UCLA, and then the newer campuses like Irvine, Santa Barbara, Santa Cruz, San Diego, Riverside, and Davis are, you know, definitely within the top universities in the world. And Merced is also one of the top public school universities in the United States, and it has actually been named the growth campus within the UC Regents, which means that they're going to be deploying a lot of capital to try to bring enrollment rates up. And the total population of the entire UC system is just under 300,000 students. So it's quite a large system, and it just continues to grow year over year. So just diving a little deeper into UC Merced, the campus itself is the newest to join the University of California school system. It was founded in 2005, located in Central California. The current student population is just over 8,500 students, and this is an important part here. The expected student population is 10,000 by 2020, and then 20,000 by 2030. So when you think about student housing and the upcoming demand, there it is right there. So again, this is a research university. It's ranked 78th as in terms of the top public schools here in the United States. So the Merced 2020 plan is a very, very compelling plan as it relates to the need for student housing. Essentially, the UC Regents authorized a $1.3 billion capital expenditure directly into the UC Merced campus. And the goal is to not only bring student enrollments up to 20,000 by 2030, but it's also to expand the campus significantly, and that includes research buildings and conference centers, parking, etc. But it's only slated to create 1,700 new dorms, and that is, if you look at the rate of the population increase that is expected, 1,700 beds is just simply not enough in order to satisfy that demand. And so if you look at what's happening now at the UC Merced, there's already thousands of students that are living off campus because, number one, the on-campus student housing is 100% occupied, and number two, because not everyone wants to live on campus. There's actually a significant amount of the student population that wants to live off campus, and as it stands now, there's no institutional quality off-campus student housing product on the market. The Merced Station would be the first to fulfill that need, and the need only gets greater as the time passes by, again, because if by 2030 there's 20,000 students, a significant portion of those students are going to want institutional quality, fully amenitized student housing complex, and again, there's just nothing on the market right now that would satisfy that need. So the next slide is going to be a video that was done through ABC News. It's a news segment which was aired where they interviewed the chancellor of the UC Merced, and specifically relating to the 2020 project. And I think a particular point of emphasis when watching the video is about 1:20 in, where she talks about just a very significant shortage of housing that's currently impacting students, but of course will be even more impactful when the student population ramps up to adding over 12,000 students in the next 10 years. So we're going to go ahead to the next slide and play the video.
The UC Merced 2020 project is moving forward, and some buildings could open their doors as early as next year. One of their downtown facilities will be ready in just a matter of weeks. Action News North Valley reporter Natalie Granda live at the university tonight to tell us about the progress and how students are already seeing improvements. Natalie?
Yeah, Warren, the project is actually moving pretty quickly. Just last year around this time, this land behind me was a blank slate, and you can really see the skyline here shaping up. This building behind me already 50% done, and this construction is actually fixing some other problems along the way.
Those sounds are music to my ears. It means we're making great progress.
The skyline at UC Merced is changing. It's only been about a year since the groundbreaking of the university's 2020 project, but 3 new buildings are already set to open as early as next summer.
It's exciting. It's as if we're building a small city. And in fact, we are, because we're putting up 13 new buildings within a span of 3 years.
UC Merced's chancellor, Dorothy Leland, says a new dining hall as well as 2 other buildings that will double as residence halls and classrooms are about halfway done. The new residence hall will have about 712 beds. Leland says on-campus housing will help with graduation retention and the housing problem that can be seen throughout the city.
It's a huge priority. There's a housing shortage, a rental shortage. Most people in Merced know it. It's difficult for our students to find affordable housing.
The project expands all the way to downtown Merced, where crews are putting the finishing touches to the school's downtown building that's expected to house at least 300 employees starting late January. A new traffic light sits at the recently opened intersection along Bellevue and Lake Road, and it's helping with traffic congestion. Another parking lot is now open to students, which they say has made finding a spot on campus and walking to class a lot easier.
I feel like the parking lot was just a good investment just because we brought in more students and we didn't have parking spots, so now that they came in, the new parking it's better. It's better.
Usually around this time it would be kind of impossible to find parking, and now has it opened up.
Several research buildings and more residence halls are underway as at least 400 crew members work on site 6 days a week, orchestrating the sounds of progress. Still a lot more to come. That includes labs, recreational fields, and a swimming pool. So this project has a budget of $1.3 billion, and so far a little bit more than $300 million has been invested into this site to date. Live in Merced, I'm Natalie Granda, ABC 30 Action News.
So the current market demand is immense, as we talked about before. Just some additional statistics. There's 5,500 students that live more than 4 miles off campus today. The on-campus student housing is 100% occupied with a wait list. And there's approximately 11,000 students that attend the nearby Merced College, which at this time has no designated student housing facilities. You know, the Merced Station project is not far at all from Merced College. It's about a mile away. And we think that there will certainly be an opportunity to capture a small percentage of their total student base at Merced Station. And then, of course, we have CBRE projecting a 95+% occupancy rate very shortly after the project is done being built. So we're quite comfortable with the demand. We think that it's just a matter of delivering the product now, and we're quite excited to do that. In terms of the project status, the development group has done an excellent job ensuring that this product is going to be delivered by the fall of 2021. This is just in time for the fall semester. And so the land has been acquired, entitlements, permits, construction financing have been secured. The completion guarantees are in place. We have slated to break ground in July of 2019, and that would lead us to construction completion in Q3 of 2021, and then the asset should be stabilized in 2022. Merced Station will be located approximately a mile from campus. So if you look to the left-hand part of the screen, you can actually see the UC Merced 2020 project boundaries. And as you see, the project is being built going south, and the land in between our site and the 2020 project is also owned by Merced. So it's land in trust, and it will in all likelihood be used for future expansions. Our site is right in between the two. So it's very well positioned. In terms of the walk to campus, it's about a 12 to 15 minute walk, 3 to 4 minute bike ride. The pathway down Lake Road is paved. It's also wide enough to accommodate traffic going in both directions. So Merced Station will provide e-scooters and bikes, and we will also have a dedicated shuttle service to run students to and from campus. So the return on investment for Merced Station is what we think is among the most compelling components of this particular investment. Just a general background on our philosophy. You know, we think that the future of the EB-5 industry is providing market rate returns for EB-5 investors. And if you look at the history of this program from a returns perspective, essentially what you find is in the beginning of the program's popularity, really in the mid to late 2000s, a lot of the investment offerings offered literally no interest. These were, you know, investments where as long as you got your money back, they would consider it a successful investment, of course, if that also came with a green card. And to us, that's not the right way to approach EB-5 investors. We think that the market will eventually adapt towards a market where investors are requiring a higher rate of return on their capital because, you know, the money's at risk, and they should be appropriately compensated for the risk that they are taking. And the other component is, you know, if the investment minimum does increase, which really has been the talk of the industry for some time now, we think that the sensitivity to returns is directly correlated with the amount of money invested. So said another way, if an investor is investing $5 and they're getting 1% interest per year on their $5, that's really not that big of a deal. But if the investor is investing $500,000, or if the new regulations are implemented, $1.35 million, or perhaps even $1.8 million, it's going to be incredibly important to the investor for an appropriate return to be generated on that money. And that, of course, is because that total will comprise a very significant portion of the investor's, you know, overall net worth. And, you know, if the money is tied up for 5, 7, maybe even 10 years, if you're investing from a country that is subject to retrogression, then the you know, the returns are ever more important because the money is not necessarily accessible for a long period of time. So again, our philosophy is to try to be the leaders in that pursuit. In that we want to bring higher quality investment offerings to the table, number one, and then number two, ensure that as a part of that opportunity, investors are appropriately compensated for the risk. So we have a 5-year investment term for our project here, and as I spoke about recently, there's a major concern amongst investors coming from China, India, Vietnam, and some other countries that are moving their way towards retrogression, and that is that the timeline for the investor to get their green card is moving past 5 years and sort of getting to the 8+ year range. And in the case of China, there has been estimates that it would take in excess of 15 years if an investor were to file now. So what we do is we provide the investor a period of extension that is the same amount of time that it would take for them to file and have their 829 approved. And so what that does is it allows for the investor to stay invested in this project. So that way they do not have to worry about what's referred as redeployment of funds, which would be if the fund's term ends, all of the capital is returned back to the investor, but they are not at the place in their immigration process where their money has been at risk as required by the USCIS, such that they would then have to reinvest their money into a different project in order to qualify, in order to satisfy the at-risk requirement for their investment. So with us, you're going to be investing in Merced Station. Your investment will stay put until your I-829 application is approved, and then upon approval, you will be able to liquidate your investment in Merced Station. The return characteristics that we are offering is quite an interesting one. It's really best thought about in 3 streams. The first stream is the annual preferred return, and this return begins immediately and it's paid quarterly. So it's a 5% annual return, and that is on the original $500,000 investment. So essentially, it is a $25,000 annual payout on the investment. The second stream is money that is paid out through the operation of the business itself. So as an investor in Merced Station, you actually are a partial owner of the project, and as a partial owner, you are entitled to the percentage of cash flow that your ownership allows. So as a result, when the building is done being, we have certificate of occupancy permits, and the building is cash flowing, we will distribute that cash flow that is generated in excess of the preferred return to the investors as well. And then the third component of the return characteristics are the gains that can be realized through the appreciation of the ownership interest that the EB-5 investor has. So again, I think later on in the presentation, we're going to touch on the CBRE appraisal that was done. And basically, the appraisal shows that the stabilized value of the asset at a pretty conservative valuation would be in excess of $100 million. So that would be a $20 million total profit on the project, and obviously the EB-5 investors would take a significant portion of that $20 million appreciation. There's only 24 investors that will be investing in this project, so the percentage of profits that the EB-5 investors are entitled to will then be split amongst the 24 investors, and the investors should do quite well. So if you take all 3 of those return streams and you look for an annual average, we expect it to be over 10% per annum. And that, of course, is based on the pro forma analysis that we have, the CBRE appraisal, a lot of market studies, and we're quite excited to offer that to the investors. So the project itself is comprised of three different forms of capital. The first is the developer equity. So that was money that was invested to acquire the land, secure entitlements, pull grading permits, and really get the process started. And the next phase of the process is to begin construction, and that's where the EB-5 money as well as the construction financing comes in. And in terms of the EB-5 raise itself, the total EB-5 fund will have 24 units, so that's a total of $12 million, assuming that each unit is sold for $500,000 per investment. There is an administrative fee of $50,000. The minimum job requirement for the project to satisfy all 24 investors would be 240. We are fortunate in that this project is slated to create 611 jobs, and that represents a very sizable buffer, which of course mitigates a lot of risk in terms of the application to the petitions to the USCIS, as they'll see that there's certainly no issue in terms of proving job creation for this project. So this slide just shows an excerpt from the CBRE appraisal that we have for this project. As you'll see, CBRE is projecting the stabilized value of the project to be about $102 million. They are assuming a 5.75% cap rate for that valuation, and we think actually a more appropriate cap rate is along the lines of what assets like this are selling for in today's dollars, which is about anywhere from 5 flat to maybe in 5.25 in terms of a cap rate. And if you were to take the valuation to a flat 5% cap rate, you're really looking at about $120+ million valuation for the asset. And that of course assumes that occupancy levels are in the 90+% range. So if you look at all of the comparable assets in the area, which to be quite honest are almost difficult to find because of the absolute scarcity of housing. But if you look at the more immediate ones, you see that they're all really at 100% or very slightly below that. So we actually expect this project to be 95+% occupied, certainly by the end of the first year it's open. That is, quite honestly, we believe to be a conservative estimation. It's entirely possible that the project is pre-leased to an extent that has us being fully occupied before 6 months after stabilization. So lots of demand, certainly a scarcity of housing in the area. So we believe that CBRE's assessment is a good conservative assessment, but there still is a lot of upside to be had on the equity itself. So ProWest is the general contractor. They are really a full-service construction management firm that are located here in California. They're considered innovators within the California institutional construction market. They've built and delivered a number of types of assets ranging from the healthcare sector to higher education, public works, and they have a very substantial and diverse client base, which is obviously important for us because we're looking for an established company that can get the job done. So ProWest, as it relates to student housing, has actually been a builder of on-campus dormitories for a number of the University of California campuses, and that's why we're comfortable with them, because this is not their first rodeo. They've done this before, and we're quite confident they'll do a great job moving forward with our project. So the company that will be actually managing and operating Merced Station is a company called Peak Campus. So they've been in business for a very long time. They have over $3 billion in student housing assets under management, about 50,000 beds, almost 90 properties across the United States. They're based in Atlanta, Georgia, and really their primary business line is management of student housing projects. So they are managers of different University of California student housing complexes on different campuses, and really are among the best in the business. So we're quite comfortable with them, and we think that they'll do an excellent job in leasing the building quite quickly, as well as maintaining very high levels of profitability as the building is being operated. So we selected EB-5 Affiliate Network State of California Regional Center to sponsor this project. The California Regional Center has a 100% I-526 and I-829 petition success rate, and the company itself has filed in excess of 1,000 I-526 petitions. So we're just quite excited to work with them. They have a lot of transactional experience in private equity, and we are quite happy they're on the team. Just a recap of some project highlights. The 10% average annual rate of return available to the investors is really a primary differentiating characteristic of this investment. The project breaks ground in July of 2019. Ample job creation at 611 jobs. We're taking on 24 investors, so that's a very significant margin of job creation over top of what is needed per the USCIS requirement of 10 jobs per investor. There's obviously quite a lot of market demand, which was highlighted in the ABC special as well as our market analysis. CBRE appraises the project to be worth over $100 million when it's stabilized. We think that this is a conservative valuation, but nonetheless is quite impressive from a returns perspective. We have a great management team. Peak Campus is already doing 89 separate student housing projects. Pro West is an extraordinarily experienced general contractor. So we think that this is just a great project for both of those companies. And of course, as I mentioned, there's 24 investors total in this project, so it's pretty small. And the project itself doesn't actually depend on EB-5 funds, which is another risk mitigant. And the University of Merced is the newest university in the California network. So we're quite excited for investors to participate in this opportunity to supply student housing to this development. And we are happy and hopeful that we'll hear from you soon.